Ed Yardeni is with us, President at Yardeni Research. Ed, good morning. Great to have you with us here. And thanks for joining in as always. I think the only question everyone has on their mind is if the worst of the panic is kind of behind us and now we're in more normal markets in that sense. Ed, your thoughts?
I think the worst may very well be behind us because I think a lot of it had to do with the carry trade that unwound, particularly when the Bank of Japan announced that they were going to be raising interest rates. Suddenly, all these speculators that had borrowed cheap money at 0% basically in Japan found that they were basically short the yen and had to cover. So I think a lot of the volatility in global markets had to do with that. And it was pretty intense, clearly. But the Bank of Japan has come out with a statement that they're going to hold off on further rate increases until the markets calm down. So I think that's a big positive. I don't really believe that Friday's employment report was as weak as everybody seemed to fear, because I think the weather had a big component in there. As a matter of fact, the Bureau of Labor Statistics in the same report, in the employment report, said that 1.5 million people were affected by the weather in terms of their jobs. Doesn't mean that they lost jobs, but it probably affected the work week. And I think it may very well have had an impact on some part-time employment. So all in all, I think you're absolutely right. The initial claims data tomorrow, Thursday morning in the United States, will be very important. We're expecting to see it decline because the past couple of weeks it's gone up on the Texas initial claims, which clearly reflected Hurricane Beryl.
Ed, hi, good morning and thanks for joining in. How are you feeling about a market like India? We continue to see good gains, but now the market has started to correct a tad bit given the kind of global volatility. What's the best way to approach it now?
Well, India looks pretty calm compared to some of the big moves we've seen in other markets. The Japanese market on one day, on Monday, was down 12%. So I think the epicenter of this unwinding of the carry trade was basically Japan. I think it's had a big impact in the United States. I think a lot of carry traders borrowed money in Japan, converted the yen into dollars and bought the Magnificent Seven and maybe the NASDAQ 100. So we also got hit pretty hard over here. But I think investors are going to be quite impressed that India got through this without a great deal of turmoil, not as much as other countries. And so I think that's a positive for the Indian market. But you know, all these markets are interconnected. I think when we get a sign that maybe the U.S. economy isn't all that weak and maybe the Fed's only going to do a quarter instead of 50, which is what the market now thinks, that might have an overall impact of kind of cooling things down a bit anyways. I think it's time for a little cooling action, sideways action in the markets.
Well, Ed, good to see you. And in fact, you know, a time-wise correction is something that Indian market participants will take. And we've been relative outperformers as well, which is heartening. A quick word on the RBI, because, you know, today we have that crucial meet. How do you see RBI move ahead from here on? The Fed, in all probability, going by the futures, well, that's suggesting that maybe 100 basis points is in the offing. Do you believe that's going to happen? And also, how do you see the RBI move from here?
Well, I think the RBI, like all central banks, is going to continue to focus on the inflation picture. And the inflation picture globally has been going pretty well. I wouldn't be surprised if we get one or two setbacks over the next few months, which means that central banks that have been easing around the world may decide that it's enough for now, and they're going to wait for some more inflation news. But all in all, the global economy looks pretty weak, which I think, particularly China, by the way, and I think that's contributing to global disinflation. And that being the case, I think all central banks are now no longer talking about raising rates, other than Japan, of course, and they backed off. But I think most other central banks are looking for cutting rates. But I think investors may be jumping the gun if they think that the recent volatility in financial markets is going to force central banks to ease more aggressively. I don't think they're going to do that.
No, absolutely. Point taken, Ed. You know, markets always sort of looking ahead and trying to price everything in, right? They think central banks had time. Now they don't. Maybe the central banks think otherwise. So they don't have to follow always they do follow what markets want sometimes, but not always. Thanks very much, Ed. Great to have you with
My
us
pleasure.
here. Appreciate you joining in with a lot of that perspective. We'll take a